What's up YouTube? It's me Gio from Robinhood Investing with Gio. In today's video, I'm going to teach you how to make passive income selling covered calls on the stock market. If you have over 100 shares of a stock that you've been accumulating for a long time and you want to make a little passive income, I'm going to teach you how you can make passive income with all those extra shares. Alright guys, stay tuned. I'll see you soon.
Hey YouTube friends and family, just a friendly reminder, if you enjoy content like this that is free, educational, and not being hidden behind paywalls, consider subscribing to my channel. Alright guys, let's get into this. Hey guys, welcome back. So today I'm going to teach you guys how to sell covered calls. In order to sell covered calls, you actually need to own at least 100 shares of an underlying stock. In this example, I'll use IPOE. I have at least 100 shares of IPOE, so I can sell covered calls on this, and I'll show you all the details step by step. So in order to sell covered calls, you would first go to Trade Options, IPOE, and in this example, we want to sell. Usually when you buy a call, you actually have to pay up the money to buy the call, but when you sell a call, that means you have the ability to sell your shares. So in the previous videos, you might have noticed that you were the buyer. You were the buyer of a call, and someone else was selling you the shares. Again, the shares were a contract. One contract is worth 100 shares. However, this time around, we're going to sell that contract to someone else. As you can see right now, the current share price is $22.84. So, since I have 100 shares, I have the option to choose any of these strike prices that I think the stock that I currently own will probably not exceed. It's very important to understand when you sell covered calls, you get passive income, but you're essentially shorting the stock. By shorting the stock, it means you're a bit bearish. So if it's a stock you're really truly married to, I highly recommend you not doing this strategy. Now, if it's a stock you don't mind losing, then we can continue to proceed. So in this example, I have a strike price here for social capital of $25, and the current share price is $22.84, and our break even is $26.53. The reason it's a break even is because, again, I'm betting that the current share price won't go to at least $25. If it does, I have to sell my shares. However, I get a premium of $1.53, and if we remember correctly, we own 100 shares. So $1.53 times 100 equals $153 we would get from this call, from selling this call. 25 plus 153 equals break even. So we will lose our stock, but we would get passive income in return. Now let's say, for example, this price doesn't go up to $25. Let's say it goes up to $24.90. In that case, we keep our shares, we keep the premium, and we live to fight another week. Essentially, we could do it over and over again until we have to sell our shares. In this example, this one's a little bit of a longer play. So if you are trying to get as much income as you can without potentially losing your stock, I would recommend weekly options. This contract in particular expires in February 19th. The current day today is January 20th. So 1 month contracts aren't usually the safest, but there are other options that I have, and I'll show you. In this example, I have another 100 shares of Walgreens. Walgreens is a stock that isn't super volatile, meaning it doesn't shoot up really high in the sky and it doesn't go down very low as well. So this would be a great stock to potentially sell covered calls on. An important thing to understand when you sell covered calls is you always want to sell covered calls if it's less than your average cost. As you can see, my average cost is $49.26. So ideally, I would want to make a profit. So I would have to choose a strike price. It's a little bit higher. In this case, I can choose a 50 strike price. 50 strike price It's an expiration date is January 22nd, which is only 2 days away, I would get $8. And the risk of me losing the stocks of my stocks is very slim. Or I can be a little bit more risky, potentially lose my shares at the strike price being $48.50 for 35 cents times 100, which equals $35. But again, if you remember in the previous slide, my average cost is almost $50. So ideally, it's not a good idea to potentially buy shares at $48.50 or $48, because I'm essentially still would be selling them for a cheaper cost than what my average cost is. Just to show you guys again, my average cost is $49.26. Now, I don't mind losing these shares. However, I don't want to sell them for less than I actually bought them for. The premiums, or the money you get in return from stocks, is based a lot on volatility of the stock. If you see, as I mentioned before, Walgreens doesn't jump up and down a whole lot. We can see it right here. The volatility is only 36.20%. Let's say if we wanted to get a little bit more risky, how about a stock that's cheap but is also incredibly volatile? We can check Space Stock. Currently, I only have 25 shares, so I cannot sell covered calls on Space. However, if I had 100 shares of Space, and let's say I wanted to sell a covered call, just something that is only a couple of dollars away is netting you massive premiums. These premiums are absolutely huge, but as you can see, the volatility on these plays is a lot higher than it is with Walgreens stock. And that's because this is a growth company. Growth companies usually have a tendency of being a lot more volatile along with penny stocks. And in return, you get a lot higher premiums. As I mentioned before, if you're going to be selling covered calls, it is a bearish type of move. You're essentially not married to the stock, and you don't have any feelings if you happen to lose it or assign your shares to someone else. Ideally, if you're selling covered calls, a great type of stock to sell covered calls on is one that has been consolidating for a long time. If we look at Apex Technology here, this one, for the past year, while it has spiked up tremendously in November, we can see the chart that it has essentially consolidated around this price range of $14 to $16 for months now. Ideally, stocks that are consolidated are ideal stocks to sell covered calls because there's less risk of you potentially having to sell your shares to another individual. Now, stocks that have a tendency to go up are probably not the most ideal stocks to sell covered calls in. You can see Apex Technology has great premiums as well. And as I mentioned before, it hovers around that $14 to $16 range for months now. This would be a great stock to potentially sell covered calls on. The only issue is the expiration date on the contracts. Another ideal thing to do if you're selling covered calls is to usually get contracts that have an expiration date around 1 week to 2 weeks. Apex Technology would be an amazing stock to sell covered calls, but unfortunately, the 1 month contracts is a little bit too much to swallow. And just to clarify once again, we can go back to Space Stock. And I'll show you guys the potential of how much passive income you could potentially make selling covered calls. So we have a criteria. Check, we are not married to the stock. That's 1. 2, you have to be acknowledged that we're shorting the stock. That's something else that we check. 3rd is how many shares do we have? In this example, this is equating that we only have 100 shares. However, let's say if I were to own 2 or 3 or 400 shares of Virgin Galactic. If I had a potential, the current share price is $32 essentially. And I'm betting that this stock's not going to go to $33 by the end of January 22nd. January 22nd, 2 days away. I'll get $43. Now, let's say I only have one contract. We get $43. But if we have something like 5 contracts, now this starts to add up. This means that we have 500 shares that we could potentially sell week in and week out for premiums of $200-$300 or more. And we can continue to do this week in and week out for passive income, probably the easiest passive income we'll ever get. But yeah guys, that'll do it for me. I hope you guys learned something. If you did, consider subscribing to the channel. My name is Gio, and I'll see you guys in the next one. Alright, take care everyone.